All right. Hello, everybody. Thank you for joining us. Wait, let me hit record on this end. All right, everybody. Thank you for joining us for today's Smart with Your Money Live. My name's Felipe Arevalo. I'm the Community Outreach Coordinator here at the DebtWave at the San Diego Financial Literacy Center / DebtWave Credit Counseling. Today, we're going to talk why your credit score varies. I've heard this a few times where people say, I pulled my credit, went to the car dealership, and it was completely different. Did I really mess up by pulling my credit? I've also heard, nothing changed last month and my credit score went up 1 or 2 points or went down 3 points, something like that. Should I panic? Is there fraud? And the answer is no to both of those. We're going to go over why your credit score varies, why you should usually, for the most part, not worry too much. We're talking small variations, but here we go. Let's get started. If this clicks over, we'll get started. If not, well, there we go. First, it's normal. It is normal for your credit score to change, to vary from month to month in small amounts. Now, if you see a giant change in your credit score, like big drops, big increases, and you can't pinpoint why that is. You didn't do anything different, no new loans, no, haven't paid down your credit card debt by a lot or increase your credit card debt by a lot. then yes, we need to go check that out. By we I mean us as consumers. Annualcreditreport.com is the free website. You can pull your credit report for free once a week for each of the 3 credit bureaus. But it is normal for every day. If you're pulling your credit and you're looking at a different score, obviously that's going to be different. We'll go over that here in a little. But even if you're looking at the same score, it's okay for it to vary. It's going to vary. It might go up a few points, down a few points, not the end of the world. And not something you need to be terribly concerned about. All right, I didn't realize my throat was a little hoarse. So one reason you can see a variation between the credit score that maybe your bank or credit union gives you on the app, or at one car dealership, to your credit union, to the banks, to the other credit, you may have multiple banks and each credit score on there is a little bit different. And one important thing to remember is there are 3 credit reporting agencies: TransUnion, Experian, and Equifax. And in a perfect world, the information on there would be identical, but this is not a perfect world. This is the real world. So your info on there can vary. Lenders, creditors may report different information to different ones at different times of the month, and it's just they're not going to be identical. And that's part of the reason you want to check all 3 of your credit reports when you're preparing to make a big purchase, or just on a regular basis, to make sure that there are no errors on any of your 3 credit reports. If you're only checking 2, you show up and the lender's using the 3rd one that you're not checking, that's a potential for an error that you haven't caught to slip by and all of a sudden keep you from being able to make that purchase, or leveraging your credit to make whatever purchase you're trying to make. So check all 3 of your credit reports, especially now that they offer them free weekly. Check them. If everything looks good, maybe you come back to them next quarter. Maybe you alternate them and do one every quarter, and then all 3 of them once a year, type of thing on quarter 4. Whatever works for you. If you need to do it on October 3rd because that's Mean Girl Day and that's going to remind you to do it at least once a year, then do it. Maybe you do it on your birthday. Maybe you do it on the holidays, whatever it is. Check all 3 of your credit reports. But just the fact that they may be using a different report means that there could be a variation. Aside from that, here, you think 3 is a lot. Well, hold on till you get to this next slide. How many credit scores are there? The answer is a ton, and there's always more being added. I know a ton is not really the scientific correct exact answer you were looking for, but there's a lot. And if you'd asked me 6 months ago, there might have been 3 less than there are today. So they're constantly changing. I got these directly off the FICO page of myfico.com. And I updated them yesterday. So this is about as up to date as possible, unless they added some overnight, which is possible. But we have different Experian ones, different Equifax ones, and different TransUnion. For example, every FICO 9, you have 3 FICO 9s. So depending on how you want to count that, you know, that you can have 1 FICO 9, but you really have 3 of them. So each one, again, this gets pretty confusing, but here's a list of widely used versions. You got your FICO 8s, FICO 9s. If you're talking auto loans, there's some that are industry specific, whether it's an auto loan or a credit card. You know, obviously you're looking mortgage, they're looking at all 3 of them, and they're going to really pick through your finances, big loans, right? So, you know, here's just a list of some of the, and these are just the FICO ones. I know you're like, well, wait, there's more. Yes, but wait, there's more. You have Vantage Scores, which is the only other major credit scoring model, and they have a long list of their own. They have the Vantage Score, and then the Vantage Score point this and point that, and Vantage Auto, and so this is just the FICO end of things. You also have the Vantage side of things. So just picture another list similar to this one with different names. And that's why you pull your credit report, you show up at the car dealership, they're not going to match. Chances are they're not going to match. You should be in the same ballpark as far as good, bad, or the other thing. But you know, you're looking at 1 free credit score from your bank and 1 free credit score from the credit union and another free credit score from something like a Credit Karma. They're not going to match. They may not even be looking at the same credit report. And even then, if they're looking at the same credit report, they may not be offering you the same FICO score or Vantage score. It's very confusing, but at the end of the day, you got to try and figure out over time if you're comparing apples to oranges, or because there's so many different combinations, maybe you're comparing them to cucumbers and it's just completely off the rails, and you got to figure out, you know, which one you're comparing to which. Now, if you check your same credit score over time, maybe the free one that you get on your, you know, bank or credit union app, so it's the same score every time, not the same number, but the same scoring model and pulling it from the same credit report, things like that. And you're comparing it over time, you know, this month, last month, the month before, next month, whatever the case may be, then you will still see fluctuations. They shouldn't be giant fluctuations unless something big happened to your credit, right? You went out and bought a car, you paid off a loan, you decreased your, you know, debt significantly or increased your debt significantly. All those can have big effects. Now, every day you making purchases, paying off your card, making your car payment, paying your mortgage, those kinds of things are not going to have giant effects on your credit. So small fluctuations over time. And if you're doing something actively to try and improve your credit, then you should see them trending in the right direction. If your debt is increasing and, you know, you're doing some things that may not be the best thing for your credit, and we do have some credit building swim lives. So if you scroll or, you know, check out the older swim lives, we got some credit building ones in there as well. But it starts to go down. You want to pinpoint why it is, if it's a constant thing. If you're losing 5 points here or increasing 5 points there, it's not, again, nothing to worry about. You don't have to go running off doing something drastic with your credit. It's fine. But over time, you do want to make sure that you're comparing apples to apples. And, you know, if you're comparing the same score and that same score is rising, there's a very good chance that every single one of your scores is moving in the same direction. So keep that in mind. First, I wanted to go over the factors of a credit score and how they, you know, the 5 factors of a credit score and how they affect your credit score, and why each factor may contribute to small shifts and changes in your credit score. So here we go. Ready for some math? I'm just joking. I'm not going to have you. I wish I could see the formula that you know, FICO uses for their credit score. I would imagine it's well above my mathematical comprehension level. I did pass calculus once upon a time, so who knows? Maybe it's not that difficult of a formula. The first one is payment history. Um, my kid was so excited when I told him, like, yeah, I can do some algebra. Can you do algebra? There was a time I could do calculus. I don't know if I feel confident enough to still be able to make that statement that I could do calculus, but payment history is the biggest thing. I always tell people this credit score stuff, not rocket science. I'm not saying it's easy. It takes a lot of discipline, but not rocket science. First things first, make your payments on time. And the reason this could affect this is the biggest factor to pretty much all the credit scoring models. So you really want to make your payments on time. But the reason this can affect your month-to-month variations on your credit score is old payments, good or bad, missed payments, payments that you made on time are falling off your credit report at all times if you have long enough credit history. And new payments are posting. Sometimes not all your lenders are going to report your payments at the same time. So, some may have you look at your credit report, you made a payment yesterday, you made a payment last week. It may not be reflecting still on your credit score that you get on your credit report. It just means that lender hasn't gotten around to reporting this month. Usually they report once a month. So you make a big payment, pay off a big chunk of debt, and it's not showing up, a week later on your credit score that you get a new credit score upgraded. And like, oh man, I paid off all this debt. You got to give it a little time. That lender may have just reported before your payment posted your previous month's, credit history, and they haven't reported the next one. So, it could take some time for it to update. Also, big purchases take a little while to hit. And when I first got my mortgage, it took a little while for it to show up. And when it did show up, I was like, holy moly, how much money do I owe? I've had some debt before, but this is like a new all-time high. Obviously the mortgage being a really big debt really messes up when you see that like total debt number, like, whoa. Take that old student loan record. But available credit, this is the next big one. And this is perhaps the most difficult part of maintaining a good credit score, because it's how much you owe compared to how much you have available to spend. And honestly, spending is a lot more fun for most of us. It's really a tempting, dare I say, to go out and make a big purchase, whether your car needs tires or whether your buddies are going on a golf trip and you just don't have the money to go right now. Not good expenses. Don't go on golf trips. I'm not suggesting everybody go out there and go on a golf trip on their credit cards. Have your friends play locally, and then you can all go golfing. But keep it less than 30% utilization, and 30% of what's your available credit. And that's really going to be beneficial. You want to be a real high achiever, keep it below 10% or keep it paid in full. And that's going to, really give you the biggest benefit. But you can track your utilization. There's a little display, a little chart here. That's thanks to Experian. I borrowed that off their website. I hope I don't get yelled at later during credit chat for borrowing their website. But less than 30% is the amount you're going to go with. And that changes. You might have just purchased something last week and it reflected and you paid off your account. But like I said, it got reported in that meantime. Maybe you don't actually have that $300 debt that's showing up on your credit report, that extra $1,000 that you purchased, a trip, but you had the money, you paid it off, but it got reported while you had that $1,000 balance on there. Something like that. So different types of credit is what it's going to affect also. You have the different revolving debt versus your revolving debt versus your installments and things like that is going to be a big one. That doesn't change much month to month, but it is affecting on your credit score. And a big one that could potentially be changing month to month is your length of credit history. Your length of credit history is always changing because it's been a month since the last time you got your free score. So that can affect positively and negatively. I apologize for the construction noise my neighbors got. I got both neighbors doing construction. So that length of credit history is always changing. Payments happened last month, payments fell off your credit, things like that. And then you have new credit. This may not be anything, but you do want to monitor if you have new credit that you shouldn't have, new inquiries, those kinds of things. That's concerning. That you need to go check your credit, maybe freeze your credit and do things like that, because it could vary. If you didn't, you recognize, yeah, I signed up for that store card, or I'm out car shopping, or trying to get pre-approved for a mortgage, those kinds of things, pre-qualified for mortgage. Then it was you. If you see new things pop up on your credit report that start affecting your score, that and then sorry, my email's going psycho today, and my phone. So just kind of pay attention to, if you see any new credit that doesn't belong to you, definitely alarming. If not, no big deal. So remember, small fluctuations in your credit score are normal. Over time, you can build your credit, increase your credit score, and move things in the right direction. But you really want to monitor your credit, or compare the same score over time if you're looking to increase, or you're just monitoring how your credit score is doing. Maybe you can compare various ones over time, like you get a free one from your bank and a free one from your credit union on their apps. Maybe you just monitor both of them, but just monitor them separately, because it may not be the same one. And also know that that credit score that you have in your app that you pulled up before you go get pre-approved for something may not be the one the lender is using. Don't get mad at the car dealership. Don't get mad at the bank or credit union because theirs is broken or anything like that. They're just using a different scoring model, and it's okay. Make sure that you use the credit scoring model, the same one for you, and just be aware that there's tons of them out there. And then for each score, you have 3 of them due to the different credit bureaus. Any questions? Normally, I do have someone relaying questions over from Facebook. That feature's not there today. So if you do have a question and you're dropping it on Facebook, you'll get a response, but it'll be delayed. It won't be here live. Anyone in the room wants to have a question, that they're more than welcome to drop it in there. If not, feel free to follow us on social media. We're on Instagram, Twitter at SDFLC, TikTok, s.d.finlit. I promise no dance videos. YouTube, and if you're watching this on Facebook, you've already found us. And then join us today. I'm actually on a panel today on Twitter with Experian. We're talking credit. We're talking credit for youth. So feel free, hashtag credit chat. We'll see you all there. And if not, join us in November. Is it crazy? It's November. Next Swim Live will be November 1st. It's 2 weeks from today. Same time, same channel. And same way to register, Eventbrite. Check it out. Join us. And hope everybody has a great day. And we'll see you all next time. Now Facebook, everyone on Facebook is like, wow, I'm still here.